think a lot, but mostly don't fall in love with the idea, fall in love with the founder. Because what was happening was that I remember this one plan that we had in our minds, this has to be the future and this is why it is. So all we did was go out and look for someone who's going to build it. And the first founder that popped in my door, he was very charismatic. And we said, wow, this is it. But he clearly couldn't execute, and we should have realized that faster. Yeah, the core principles that was that if I build a firm, I need to be an all-weather partner, because having come from a family of founders, I realized that entrepreneurship is super hard. I've seen my dad from day one. He had a shoe company, then he made watches, and then finally televisions. And then I started my own companies after that, including a BPO business and another company after that as well. So I realized that entrepreneurship is very, very hard. And what entrepreneurs need is someone who can hold his or her hand in the tough times, because it's a journey, it's not a destination.
Hi everyone, guess who we have on the show today? It's my good old friend Sasha Mirchandani. It's a pleasure to meet in this fashion, though we used to do a lot more coffee meetings in Starbucks in Fort, the very first Starbucks in India. And of course, like many things in our lives, we were pioneers in what we did, Sasha, and it used to be a pleasure to catch up in the morning, compare our war stories of going and begging for money. And here we are, 14 years older and wiser. And thanks again for contributing to the Omega Files episode 2. It's a pleasure when a peer set is championing the cause of Indian venture as a collective. And to me, this was a format which I love for that. And then hopefully showing the way for hundreds of others that are coming. And that could be sort of what we give back to the ecosystem when people write the history on Indian venture and how well it did in 2040. Maybe some part of that story will be scripted by our humble beginnings. But welcome to the show, and we're calling it Omega Talks, and we're trying to build conversations around this for younger managers in the country on the back of what we all learned through at least cycle 1. I know we are still both working on cycle 2, but thanks for sharing cycle 1, and a pleasure to have you again.
Yeah. Thank you, Karthik, for the invite. I remember those meetings very fondly in Starbucks in the corner, and we did it for so many years. It was great memories. And I'm actually particularly excited about today's session, and I mean it authentically, because of the person who's doing it, which is you, obviously. And I've seen your journey from day one, and I've just been a fabulous fan of what you and Sanjay have done over the last 15 odd years. It's an incredible journey. It's like a startup that I funded and seen the journey, or seen another company get funded, and the Blume story has been fabulous. And your ability to have everything out in the open is incredible. I mean, very, very few VCs worldwide to do what you guys are doing. It's a great service to the ecosystem. So keep it up. And so I'm very happy to be part of this today.
No, thanks. We all respect each other. And actually, since you made that statement, in some sense, if you look at the very first headline that came out around Blume, you actually have a role to play in that as well. Do you remember the headline vaguely or no?
No.
It says Mumbai Angels duo start a new fund.
That is so funny.
So basically, because that was our only calling card, Sasha. And, so I'm going to ask you the counter question, which relates to that. Sanjay and me met through Mumbai Angels, which you co-founded. And some phenomenal stories before K even started. So maybe that's the leader today. People would love to understand, why did Sasha start Kae Capital? And a lot of them now in the ecosystem are too young to know and remember and know the history of Sasha and Mumbai Angels, etc. So maybe take a step back and let's weave not too much time, but a very quick intro to Mumbai Angels and how that transition to K.
Yeah. The way it ended up happening, Karthik, is that I had been investing initially in my career through my personal capital. This was more like my father was the LP, I was the GP for a period of time, let's say in the early 2000s. That was unsustainable because I didn't like to go back to him for capital, but it was a good fun period. Post which, me and Choksi, we co-founded Mumbai Angels, where we were, we all met up, people like you, Sanjay, and the whole ecosystem, grew together. But the reason I started K was for two reasons. One is A very good founder who's now, I don't want to name him, he built a very large, very successful unicorn, was having a coffee with me one day and said, Sasha, I wish, so I said, why didn't you come and take money from Mumbai Angels? And he said, look, Sasha, I really wanted to have just dealt with you alone. I didn't want to, I was in a job. I didn't want to go out in front of other people and discuss my plans. I didn't want to be out in the open, and I wanted a quick decision. And
Hmm.
you would have been an ideal investor in my funds. I also did not want to go to the larger funds because of the optics of it. So if
Hmm.
you had a fund, and he wasn't kidding, he was serious about it, I would love to have come to you. And this discussion triggered a thought in my head because a couple of months before that, KV Dhillon from Guggenheim had approached me and said, why don't you leave Blue Run and do a seed fund? And at that point, I was a bit reluctant. I remember having a drink with my dad, and he said, you should do it too. And I had kept it in my mind because he's an entrepreneur and we were a family of entrepreneurs. So this confluence of these two said, okay, why not? Let's just do it. And that's how it ended up happening.
Fantastic. And what was some of the core principles and philosophies that guided you which were different from Mumbai Angels and your last employer in life, which was Blue Run?
Yeah, the core principles that was that if I build a firm, I need to be all-weather partner because having come from a family of founders, I realized that entrepreneurship is super hard. I've seen my dad from day one. He had a shoe company, then he made watches, and then finally televisions, and then I started my own companies after that, including a BPO business and another company after that as well. So I realized that entrepreneurship is very, very hard, and what entrepreneurs need is someone who can hold his or her hand in the
Yeah,
tough times because
yeah,
it's a journey, it's not a destination, and
yeah.
therefore I believe that we could build a firm that could be all weather partners. That would be a core principle. Be there when the entrepreneur needs you the most, not when times are only good. And that's been the core principle of K from day one to today.
No, since you mentioned your dad, and obviously he's been a huge influence on you, on Mumbai Angels. Even I've had the good fortune of being with him on boards, and we wrote each other a nice parting mail when I resigned from that board at Algorithm. For the people who don't know, he's the well-respected entrepreneur of that generation, Blume Ventures, who founded Onida. That was the third venture that Sasha speaks about, which his brother Kaval runs with his dad right now. And a lot of you are too young to remember, but legendary ad where the devil comes across the television and says, "Neighbors envy, owners pride." Was something that we all had memorized much before I knew somebody called Sasha Mirchandani existed. So, so I know you had nothing to do with the tagline, but
Yeah,
like, yeah,
nothing.
your dad's like quite the
The
legend
rumors
of
that
that generation.
I was the devil in the ad campaign because my father wanted to save money and take a cheap model, but I was not the devil for sure.
That's a rumor, is it? It's a good
Yeah,
rumor.
yeah, it's a rumor. It's a
Any
serious rumor. I said,
other
life, are you kidding me? No, I was not.
before we move to like learnings from that fund, which is what today's episode is about? Any other memorable stories from the hardships of the early days of building K that shaped how you became, the K of today, right? 14 years hence. It could be a fun anecdote. It could be some life lesson. Clearly, it was going to be different from what you learned in Mumbai Angels and Blue Run. What's your fondest memory or lesson from that era?
I think a lot, but mostly don't fall in love with the idea, fall in love with the founder. Because what was happening was that I remember this one plan that we had in our minds, this has to be the future and this is why it is. So all we did was go out and look for someone who's going to build it. And the first founder that popped in my door, he was very charismatic. And we said, wow, this is it. But he clearly couldn't execute, and we should have realized that faster. Huge cost. I remember sitting in the lobby of the Four Seasons and he was checking in. And this was like a seat check. And I was amazed that he had come business class and checking the Four Seasons, which I have zero problem with if you're doing it for your personal money or when you do reach a certain level in life, why not? But it was just one of those learnings that, listen, please don't fall in love with the idea. You got to do both, but the founder comes first before anything else, and we try to stick to that. And whenever we strayed away from that, even now we've made those mistakes over the years. Once in a while, as humans, we fall into that trap, but we screw it up.
I remember that founder. I remember that story very vividly. And we all come from like the same school of like, I think, that first fountainhead of venture capital, which were the angel networks. So similar lessons, by the way. So I couldn't agree with you more. Cutting over to, learnings, challenges, pivotal moments, because today's episode, little bit is, I'll probably split the next, 25, 30 minutes into two halves. One is what did Fund One teach us? Because fundamentally, that was those were our foundational funds, right? And then how do we evolve from there? What is it taught us to become, right? And so I'll interchangeably touch upon a lot of these. In Fund One, if you looked at our Omega One, we touched upon fundraising, we touched upon geographic complexity, we touched upon different types of founder profiles and backgrounds, different sectors. What were your big takeaways? What were your big challenges, and how did you navigate them in those first 4 or 5 years?
The biggest challenge was that the asset class, even in 2011, 12, when you were raising the fund, was very new in India. So,
Yeah,
and who did I know globally? I didn't have such a great network. So, whenever
yeah,
I go to
yeah,
meet investors,
yeah,
and the idea was to do a very small fund, and I thought it can't be
yeah,
that difficult. But 6 months
yeah.
into it, all I had was money from my two bosses from Blue Run, John and Jonathan, and that wasn't enough to raise a fund. So I realized that no one in India is going to do this. So how do I go overseas? And I think the best decision I made was to get in front of Sequoia Capital. And initially they were like, no, we're a fund as well. But I explained multiple times before they got me in front of Mike Moritz. And once I met Mike, for whatever reason, he decided to invest. That helped a lot because then the optics, using his name, saying Sequoia is now an investor, I could go anywhere in the world. And we ended up getting a lot more money overseas for that fund. So it pretty much saved us. Otherwise, there would have been no fund.
No, no, I think it was smart. I know we didn't obviously get the years and eyes of Sequoia, but like we were offered in other cases. But the only caution I would say was you have to. It's also tricky because it's a long-term relationship, and if you tie up with the wrong kind of partners, it's much like a co-founder decision, right? You're stuck with them for a decade. So we didn't end up partnering anyone because we didn't get someone as illustrious as that. But I can relate to your part of the story.
And we got lucky because they've been fabulous partners for us over the last 15 years.
That apart, were there any other pivotal moments or key decisions that you made that had a lasting impact on your trajectory?
Yeah, the key decision was we got oversubscribed once this happened. And it was damn tempting because I remember there was one of the world's best funds and they said, we'll give you $5 million minimum. And they normally give 10 plus. And I said, I can only take one because we didn't want to keep the fund too big because I knew I'm going to make mistakes being the first fund. And they actually didn't come in, which was still fine with me because we decided to keep the fund at a number which is palatable. I think it was $25 million moving on, so
I,
150
I
crore.
remember, yeah, it's about that size, your first fund, yeah.
That's right. So that was a key one, and I can see that the result of the fund has been much better by keeping it smaller, especially the first fund. The other was I'd gone and met a lot of VCs in the valley, and one of the things was at least have reasonable ownership in your companies, and therefore even till today we have large, when I say relatively large ownership in our winning companies, which
Yeah,
has
not 2,
helped
3,
us.
4, 5%, yeah.
Correct. Even now, 10 years later. And another was this term recycling. I didn't know what recycling was. And I remember we had closed the books of the fund. And then I met this one investor in San Francisco and he said, look, if you don't have recycling, here's the data to show that you won't succeed for these reasons. And I was like, wow, this is scary. Like I'll just spend 10 years and fail. So I went back to our LPs and requested them with a detailed presentation, which to their credit, they agreed. It was normally once you close the books of a fund, the chapter is closed. And our 29th investment, because of the 5 exits we had, ended up being Porter, which has returned the fund multiple times. So that one clause helped us tremendously.
That's quite a story. Yeah, I didn't realize it was your last investment of Fund One. Yeah,
Yeah, the second last.
second
But
last.
but if we didn't have
It wouldn't have
recycling, we would
happened
never have
without
done it.
recycling.
Wouldn't have happened without recycling.
You know, it's just for a lot of folks who are listening and probably younger managers, boatloads of learnings in what Sasha just shared. Well, I think right sizing of a fund for a particular era is very important. The challenge, Sasha, I don't know if you've noticed, and other founders have told you, new managers have told you this, is when we were playing, valuations were 2, 3 million, 4 million. Now, round sizes are that much, and valuations baseline has become 5 million, right, for a good founder, which means you're not able to get the ownership with the same dollars. So I don't know how the young managers are coping, but that was a challenge. And the third thing that you brought up is also fascinating, which is I don't know if you know this, but we are subject to some Indian money, and some of the Indian institutions actually don't allow recycling properly, even in this era. So they say, no, you have to return the money, right? And they don't realize that it is not just about tactical, it's not about greed. It's the right thing to do to optimize for the right IRR. Apart from the fact that you can get lucky with a fund returner like Porter. No, but that's the business, right? That is the business. So you got to be playing it by the rules of the business. So
Yeah,
awesome,
just
awesome,
an
Reddy.
anecdote, even
Yeah,
fund to us, 27th or 20th investment was at work. So you can get the picture, you get the drift.
fantastic, fantastic. In hindsight, what is the most surprising outcome, good or bad, from Fund One? And what did it teach you about early stage investing? One we got, the
Uh,
Porter one, but any more? Yeah.
yeah, the most surprising was Certa, this company called Certa. And the learning was that, in my head, the best founders are the ones who iterate fast, fail fast, aka someone like a Naveen Tiwari, where we both invested together. Great story of InMobi, how many times he failed. I've given the story a million times all around the world to the credit of all the InMobi founders. And that's one prototype of a successful entrepreneur. Um, but there's another which is, it's maybe not a great term, but I think people will understand resonate, is a cockroach founder, but in a good way. Someone who just keeps himself or herself alive and just add it, add it without giving up, understated. And Jag, founder Sutta, is a great example of that. I kept telling him, Jag, are you sure you want to continue doing this? You're a Wharton guy, you're a McKinsey guy, go do something else. But he was like, Sasha, don't worry about me. I've got this. I'll figure it out. And I was just having a coffee with him in Bombay 2 weeks back. He lives in San Francisco. Company is doing phenomenally well. And it's a great example of someone who has had the grit, who's willing to sacrifice 10 years of his life, give up so much, right? Because with his background, huge upside and the cost of living in California, you can imagine you and me can't survive in Mumbai without salaries. And he did it. And so that learning was that different prototypes of success. You got to keep your mind open for all, not just one bucket.
I don't know whether that the numbers of that generation will ever play out again, but I also feel it's circumstantial. It's about an ecosystem where you had no choice, right? I mean, even if you quit on it, what would you go back and do? Something which you were less passionate about? Was there like a hot company that would pay you an arm and a leg, or was there a hot VC who would give you a second check? All that is a post 2017 18 phenomena, right? So in those first 6 7 years, if much like how we toiled, our founders toiled even better, or even more. And you're absolutely right. We have two, three, four stories of that nature, and they're still playing out. And most people wouldn't have believed they would have survived this long. So I think we keep saying I don't think we'll ever see the aggregate level of grit we saw in Fund One. We'll never see again.
That's right. I mean, great example for my personal portfolio, which is even longer, is Fractal, right? Because Shrikant and Pranay built out that company from 2001 2 onwards, and now it is where it is. It's a phenomenal business. But the amount of grit and determination the two of them have had and continue to have to this date, it's just incredible. It's like I got a ringside view of it every quarter. It's just incredible.
And because of small technicality, we sat in the ACG office in Mumbai Angels and we couldn't cut the check at a 10 crore valuation in Fractal. Because he was something about cross-border wiring,
Yeah,
etc. And we
some
passed on it,
nonsense.
and then the rest is
Crazy.
history. But
Yeah,
Shrikant was on our first season podcast because
is
we
it?
just loved that storyline. And
It's an incredible story.
Sajid and him are classmates from IMA, by the way. So
Oh, is that right?
that's
Yeah, they
that
all
was the
went to IIM
backstory.
to A together. Yeah, correct.
That's good.
Small world.
That's good. Anti-portfolio, what did you miss in Fund One? Any regrets, any learnings, any reasons why that happened?
Yeah, we missed so many. I can go through maybe 10 iconic companies. Like Ola, we missed because, yeah, Ola they missed because I love Bhavesh the minute I saw him, but I think we saw it a little late because by the time we saw it, and I said, hey, Bhavesh is amazing. I still remember the pitch 15 years back, and you and me get pitches every day of our lives, so you tend to forget most of them. But I think it was too late, and by the time I met him, just 2 days later is when another person, firm came in. So my regret is I should have been in front of him earlier. It's our fault. That's completed here. But companies like Freshdesk we missed because we felt that there were a couple of other players playing, already in the market. They were a little bit bigger. Would they stand out, etc. Competition. They were not looking that differentiated. Obviously, we didn't go into enough detail, so we missed Girish. We missed a company called Neom. I'm trying to remember the exact name of the company. NIUM, Neom. It was called something else that time. Cross-border payments company. Fabulous business. And again, we didn't understand how big the market would get to. Even then, we liked the founder so much that we almost invested. It was a pittance. He was asking for 250, 300K for as much of the company as we wanted. And I really liked the founder. We were about to press the button, but then we overanalyzed the model. And I think that's a regret. We should have just done it. So that's another one that stands out. Now, if you had more time, I'd give you 10 more.
No, we're all victims of some error or the other, and that's venture capital for you in general. I keep reminding our founders that the reason you pitch 40, 50 investors is because even for the best in the world ever, the success ratio is like 2 to 3 term sheets after pitching that many, right? And so it's not like the other 47 are bad people or idiots, but you can't see everything the way the entrepreneur sees it. So we'll all make mistakes.
But one thing we've learned, among many things we learned from Bloom, because of your, let's say, generosity and opening everything up, is you've been talking again and again about, listen, don't worry about, name loss, focus on dollar loss. So if Bloom loses 10 extra companies, you don't care because you've controlled the amount of dollar, which we were not so good at earlier, which will become a little bit better because of hearing people like you. It's very logical. So I request people to keep what you've been saying a million times in mind. Focus on the dollar loss, not on the name loss. Let a few more go. It's okay. That's part and parcel of our business.
I think though, Sasha, like now I would admit that as you become a larger fund, right?
Yeah.
Both matter, right?
Yeah, agreed. But I'm talking about the audience is
for
a
our
little bit.
micro VC crowd, that's the
Correct.
right approach. Yeah, so that's our learnings from Fund One. Interestingly, as you and I know, both of us have been pushed down the funnel in terms of the value chain because we can't compete for 250, 500K checks anymore. There are just 100 plus of these funds who are hungrier than us, who want to be in all of these companies. So it's all good. It's all evolution of an ecosystem. Any instances where you think a success or a failure of a portco changed, your approach towards a sector or the way you evaluate things, and then that created like a net benefit later on, like and got you like a great company?
I think the example I would give Karthik is not from K, but from Axel. Axel's investment in Flipkart. And it's a great case study for all of us because we all know the story, right? They almost didn't invest because it looked like a very small market, but eventually they did, to their credit. And the learning is you could have a tab that looks very small, like initially Flipkart was just books, but they just dominated books, grew really fast, and the best founders know how to keep extending TAM. So I would just start looking more at, not worrying too much about the market first, but what are those entrepreneurs doing? Why is the product loved a lot? And also, are these founders capable of actually expanding time? Are their ambitions just to build a small community? If they're not, they figure it
That's
out.
different. Yeah. That's different. Yeah.
So that's been our learning, is that if we get entrepreneurs, do we really overanalyze the time sometimes? We do, and every time we do that, we have a situation where we say, oh, we missed Flipkart. We should have not overanalyzed the time. So that's learning.
No, and since you talked about founders and their ability to reimagine TAM, and you talked about that being a necessary ingredient, what are other underrated qualities or overlooked qualities of great founders that you think you've picked up? Yeah.
Okay, one could be authentic. Founders need to be authentic. Don't try to be someone you're not. We believe that. Adaptability. Founders need to. It's a changing world here. So people who are very adaptable, we like them to be. We really like them. It could be customers, trends, whatever it may be. We like founders who have long-term thinking bias because this is not a two-year window that you and me are in, right? It's a long term.
That's right.
Like our best founder on the planet, Steve Jobs, curiosity, to be very curious. Like my father is 81, but he's so curious even now, all the time, asking
Yeah,
questions.
he's amazing. He's amazing.
Yeah, I get irritated when he asks, but I say, wow, actually, that's a damn good question. So it's very, very important to, and of course, effective communication. When you're a leader, you have to communicate very effectively and get out of your. A great example is Mukesh Ambani. He came from being a very introverted individual to now look at his communication over the last 20, 30 years. Incredible. So you have to be. I was lucky to meet Mr. Gautam Adani recently. What an effective communicator. Fabulous.
I'm going to switch gears a little. I think we talked about like what all we learned from Fund One. Today you're not in Fund One. What are you? You're closing. You're investing out of Fund Three right now or Fund Four?
Yeah, Fund 3. So Fund 4 will come next year.
And you had these two funds. You grew from 25 to 60 to 100. Was that the evolution?
Yeah, something like that. Not 60, 50, 25, 50, 100.
Okay. So doubling now. So next one's 200.
No. That's a longer discussion.
Well, okay, we'll have a chat. That calls for the coffee again. But yeah, so What have you noticed in both founder behavior, ecosystem, living through these 14 years? I mean, all of us have views, but I would love for the audience and the younger managers and the entrepreneurs to hear you.
Lot of changes, of course, and just a few is maybe less worried about failure. It's still not up there. I feel, I just feel there has to be even more education here. It's a long way to go, but less worried about failure, willing to admit it and move on and get the next thing done. More open to experimentation, focus on unit economics. Obviously, that depends on the time of the market as well. Hot markets again, but I think a lot more maturity there. More open to building strong teams, not just doing this on their own alone, and so on and so forth. More customer obsessed, understanding how important it is. So these are some of the things I've noticed.
I think there's a sort of osmotic learning amongst founders, right? In some sense, and it's a function of how dense the network is, which is why Bangalore still takes number one position in terms of density for sure, right? Delhi obviously wants to brag that they've got more IPO outcomes, and it's true as well. But I think the density does matter, and both of us live in Mumbai, but we know we suffer from Mumbai is such a dense city, and the startups are very sparse, right? And so it doesn't help. But some of this, all of what you highlighted, I see uh, as a function of how much of that density gets naturally created in an ecosystem, which is why Silicon Valley, and which is why Bangalore is has a little bit of a head start. And I think founders are learning much faster from each other as well, which has been fantastic. Um, have as a VC firm, do you think your values or priorities have shifted in as you grow up into different fund sizes and if you as you mature?
I think not really. We've stayed true to the same. We've just been the same. Nothing much has evolved, I feel.
No, I think that's important. I think generally the vision of a VC firm, I think, stays intact and close to what the founder set it out to be. So I'm not surprised with that answer, honestly. I didn't mean it to be a trick question, but I think I'm glad to hear that it's exactly what it was when you started. Um, any specific company that and we talk about this at Bloom as well. Eventually, if Bloom were to be regarded as a great fund, we're actually a derivative business, right? It's going to be on the top of the shoulders of giants like our portfolio company number one, two, three, four, five, six. Today, when you think about K and what impact you've had on the ecosystem, is there a specific portfolio company or a milestone that you believe has begun to show that? Like, what is step one of that aha that K has created? Is there a portco that exemplifies that?
I would say it's difficult to pick one. I'm sure you would agree. Most VCs don't like to pick one company because every entrepreneur brings something else to the table, whether it be from my personal investments or whether it be through K. It's very hard to say, okay, this one. Uh, but if I had to pick one, again, not because it's the biggest one, but let's say a company like Porter, where the entrepreneurs were so young when they started the company and they went through that's right, and they went through so many cycles, so much adversity, so much negative is so many ups and down markets, etc. But to just be there all the time, where they were, Pranab Uttam and the rest of the founding team have always been very, very focused, very mature, just very understated, and the way they built it, super, super resilient. And a lot of the traits I mentioned earlier, they embodied it, without speaking about some of the traits that they have. And today the company is in phenomenal condition, and I feel that that's a great example. Nothing to do with K because they did it all themselves with a little help from us and all the other VCs on the cap table. But honestly, I give them a lot of credit.
Awesome. And what is, I mean, in a very succinct manner, what has changed in the way you make decisions as your fund size grows? Could be check, round size, ownership. It could be the way you evaluate founders. Any just headlines on when you talk to your LPs as well? How do you describe what you've evolved into in terms of?
Yeah. So one of the things we used to do was like our first checks were at some point even more than 50% of the overall fund, 55. So now we're very careful about that, saying can we keep it down to maybe 45 because we don't know who's going to win. So can we keep the reserves? It's very important because our business is about capital allocation, and the tier one LPs are going to evaluate that and say how are these guys using their limited capital, and have they got some science behind it versus just hoping for the best. So we're very careful about how much we put upfront, and then hope to see which ones are going to win, and then double down on the winners is a very important scenario.
And team, I know both you and I didn't necessarily sign up for these multi-decade journeys, or at least we didn't know what we were signing up for. And you got to keep building people. Like every entrepreneur's life, people are the mains. The product and all of that is great, but eventually people have got to build those organizations. When you think about what comes after you, or who succeeds you, or who you're grooming, what are you looking for in talent for an aspiring VC? Yeah.
This is the most important thing, right? Like in any business, the team matters the most. So we like people who are humble, but still ambitious at the same time. Curious, as I mentioned, is the trait that we want. We want team players, Karthik, not lone wolves, because VC can be a very easily a lone wolf industry. But we prefer to work as a team because being a small fund, we believe that if the team works together, we have a chance to compete against bigger firms. But if it doesn't and it's lone wolves, it's not going to work. A lone wolf model may work in a 500 million billion dollar fund. But the most important trait is we want both IQ and EQ. But if you have to choose, I'd say I want higher EQ than IQ. I mean, obviously, you want a certain level of IQ, and nobody in our industry has low IQ because they're all smart people, right? But we prefer the EQ element. It's very important because you have the empathy for those founders, which is very, very important, I believe.
No, I relate to everything you said. So thanks for saying it out loud. I know that a lot of youngsters who want to break in. I wish we could create more jobs. It's a boutique cottage industry, and there are hundreds who aspire to be here. But at least they should know what they're signing up for. And not too many know that. I think they come for the excitement, but they don't realize it's a very, very long feedback loop. Job or whatever you want to call it, a role. It's really not a job. It's a career. And then maybe we'll wrap with some broader ecosystem reflections. Uh, uh, you know, of course, we touched upon a lot of things around how early stage investing has changed from when you started. If you were, giving advice to a future Sasha starting today, what advice would you give in terms of how to do it in this ecosystem? Not easy. I know it's not an easy answer or question, but what advice would you give today?
You mean like what advice you give to fellow GPs? Is that the question?
Yeah, like someone who's a 37-year-old version of you today, starting.
I think what you guys did was actually perfect. Like what most VCs to do is have uh, fellow GP slash partners who complement each other. Which between you, Sanjay, and everyone else. Who Ashish, of course, my buddy, the low key one in your team. So all three had Ashish came from a finance background, Sanjay came from a different background, you came from a different background. So it complemented very nicely. And therefore, I recommend that blue model to many people is to start with, like we tell our entrepreneurs, right? Where is the co-founders? And we see even more so than a company because it's actually built to have multiple partners running a business versus a traditional company. So I would say also what kind of firm you want to be upfront is very, very important. So we decided that we were very clear that I just want, as long as I'm running this firm, I want to be focused on early stage seed. So we were very clear. The next point is even more critical is LPs hate style drift. So when we tell them, look, we told you in 2011 you're going to do seed, and now in 2024 we're still doing seed, many of them appreciate that because for us to then become a VC firm or a private equity growth fund, which is absolutely possible, but then what have we done differently to reach that level? If we haven't, and we're still trying to play that card, saying we're now playing up the value chain without making changes, then you're a recipe for disaster. So style drift is very important. So we were super clear we want to be a seed fund and we continue doing that. So think a lot before you start the fund and think of the next 15, 20 years and what do you want to do for the next 20 years. And for example, let's say a fund like Nalanda, it's very focused on just public markets. They're not here to do anything else but just that. And I'm sure the LPs appreciate something like that.
Yeah. If do you ever dream that there'll be a book someday on the K journey?
No, nobody's going to be interested on case journey.
But if you did dream, or if your teammates did, what would the title be or the central theme be?
Well, I don't know if we can commander a book and we don't want that to happen, but I think if we can have a small chapter saying that we played a very small part in a small contribution at that stage, which is the really early stage, firms like Blume, K, etc., because I think we played a pretty interesting part in the entire ecosystem. So it's the sum of all parts that makes the success of the ecosystem. So I think all of us have played that to a little extent.
No, Sasha, you're being humble. All of us, yeah, you're right. We did play our parts, but yeah, you're quite like pivotal actor and did many cameos other than K. So thanks for all of that. And if you know, I know all of us try to influence policies, and we think about um, what could be better in India's startup ecosystem. I served on the IVCA as vice chair and chair. We to keep trying to push the ecosystem forward. Anything that's bugged you and you would like to change, both either on a policy level or a culture level.
I think there are quite a few small things, but I feel it's not fair to bring up small things in life. So
Yeah,
let's talk
one
about
or
the
two big things. Any big thing,
I
one big
think
thing.
my view is that the government has really gone out of the way, much more than I would envision the government to actually support. And things like the SIDBI funds and SRI and so many other things.
A lot of contributions of capital policy on startups. Yeah.
I think the understanding that this is a very long-term asset class, if that can change, where, for example, if SEBI didn't have to come in and say, "Oh, you have to close the fund in 10 years," and let it be the discretion of the investors and the fund managers, because the whole point is, if you're a 1 crore minimum, that means you got an HNI who he or she has done reasonably well. Correct. So why are we then forcing them to then take a decision where we are closing funds in certain time frame?
They're soft pedaling the issue for now. Let's see where we end up on
Yeah,
that.
I hope that changes, because this is a very long gestation business, and I really hope that that can change. Yeah.
Yeah. Last question to sign off. If you weren't a VC, what do you think you would have become after Blue Run?
Well, I haven't answered this question to anyone, but I'll say it first time. Is I would love to be a sushi chef. Because I love sushi so much. I'm passionate about sushi to the extent that either I will, if I had the money, I would hire a sushi chef in my house, which I don't have. So I'd rather do it myself. And I'd love to go to Japan at some point and learn the craft of making sushi and then make it for myself and my best friends. So that's my dream.
I love it. I mean, I wouldn't mind learning a bit of it myself as well. Similar love for it
I'll
and
make some for
similar
you
taste.
one day
Yeah,
and call
yeah.
you over.
No, I'll take you up on that, sir. That'll be when we truly toast, our sort of long journeys in this together. But you've seen my blog around how I equate our venture lives with the sushi chef. You've not
No,
seen
I
this
haven't.
one?
Please send it to me or I'll check it out.
Yes, sir. You actually chose the other alternative. The other alternative was a sushi chef.
I
It
see.
takes so
It's
long to
amazing.
master the art that it takes a couple of decades at least. So you're well on your way on path two, and wish you luck on someday getting the time and place to go and be that sushi chef. And I'll take you up on that offer someday. Thanks, Sasha. It's been a delight to chat with. I know we wanted to try and wrap this in 30 minutes, but I think the additional 6, 7 minutes are well worth it. And good luck to you to continue your journey. And we should bring that not Starbucks today. There's like a lot of hipster coffee joints, so we can shift loyalties a bit and try some new coffee joints in South Mumbai.
We thank IDFC First Bank for being our annual partner. IDFC First Bank is deeply engaged with the startup community in India. Their commitment to fostering innovation and supporting entrepreneurship has made them a valuable partner in the growth journey of numerous startups, including many Blume portfolio companies. This partnership helps us in a mission to back the next generation of revolutionary founders in India.